if somebody wanted to take Strategy's Bitcoin stack, they could probably pay the price. Strategy could probably sell it at the market, right? Like they could sell a significant amount of Bitcoin. Like there's probably players out there who have $50 billion that they want to buy Bitcoin with, but they just have to do it over time because of how markets work. So if Strategy wanted to sell their Bitcoin today, they could probably find a buyer who is willing to buy 10 billion, and then another buyer who's willing to buy 10 billion, another buyer who's willing to buy 10 billion. They could liquidate everything they have at the market. So I don't know if they can go below 1, because they've created this system, this machine with Stretch that keeps them just adding more and more money and getting more and more Bitcoin. It's making their flywheel even more powerful.
I agree with that, but I don't know if the market would 100% realize that in the short term. So I think it's definitely possible. Now, what the possible of MSTR dropping below 1 MNAV, what the likelihood is, I don't know. I wouldn't rate it necessarily that high, but I think it's possible personally.
Yeah, and especially in the short run. You're right. It can drop, but in short, it's just like my question was more like I think it doesn't come to a long-term problem, because if Stretch is a popular product, people naturally go ahead and say like, hey, I like the volatility and the high rewards, and I see a lot of people love that Stretch product, so I'm buying some MSTR shares. That's kind of like the thing. But you're right. Like short term, like anything can happen. I think they are even already dropped one time under 1 MNAV, right?
Oh yeah. Oh, they did in the past. Yeah. Actually, I think recently it depends how you measure it. People are measuring versus market cap or enterprise value, different measurements and things. But they can still just buy Bitcoin anyway. Even if they are issuing below 1 MNAV, they can still do that to just buy Bitcoin and build their capital base. So it's not. That's the other thing too, is it's not necessarily true that they can't continue to expand their capital base even below 1 MNAV if the MSTR stock is trading that way, which still allows them to have an amplification ratio that they want to have. Yeah, I think the only reason I brought this up is because I think a lot of people are quick to jump on narratives and see these things as like, oh, this is the sort of the end game. And I'm guilty of that too. But like SDRC is incredibly innovative. It is definitely going to take a larger market share over time, but it doesn't mean that because we've had this they've had this unbelievable success with it recently means that it won't decouple. Amplification ratio goes up. They end up lowering the dividend because there's not enough, or there's too much demand. There's still a lot of potentials, possible futures for this, I would say. And I think a lot of people are like, oh, this is it. We have a constant bid from SDRC now. I think it's exciting as it's happening, but I would just expect it to just continue to be volatile based on like if it's actually working or not.
One thing I find really interesting, and I was watching the True North pod the other day. It was really good from like last week, I think. And I haven't caught their show in a little while. But I knew we were going to talk about it. So I was catching their stuff, and, I know a bunch of those guys. I know a bunch of us know them, and they're good dudes. And, one of the guys was talking about the Strategy World event and the True North thing, they had at the event, the little satellite. And, he was saying that there was a guy, a business owner there, and he was like, yeah, I'm using the Stretch for my short-term capital, like we've just been talking about with the business. So it's coming in. And then he's like, when I get the 11%, then I take that 11% and I put that into Bitcoin, actual Bitcoin, and self-custodying Bitcoin. And so, again, Rajat, you and I have talked about this a little bit. I know Jor, Robin, and Forrest, you guys have talked about this over time too. But from real estate, the world I come from raising money, buying apartment complexes, things like that, it is mind-blowing to me. And Grant Cardone now, it looks like this made me think of this too, is kind of finding that unlock. But the ability to raise money, have none of your money in the deal, then go buy an asset with it with fixed debt, and then use that cash flow to buy a Bitcoin or, Stretch or whatever this thing is is wild to me. And the fact that zero people, and not zero, but like largely almost no one in the world has figured this out is so mind blowing to me that it's just like you just from so many angles, you wait for people to wake up, whether it's the stretch or strategy, what's going on, or it's just this like the burr strategy in real estate and how you can use it with Bitcoin, or the Bitcoin mining, like we mentioned earlier, and how it's like, if you're a greenie, well, here you go. There's so many angles, and like, how are people not awake to this? But it's just time at the end of the day. But anyway, I just thought it was fascinating because I've been thinking about the real estate thing for a while. I got out of it largely just because of my situation in life and time of life. So I just couldn't put time and energy into it anymore. I'm like, gosh, do I wish I was like in real estate full time, just like raising money, taking it, and then using that cash flow to buy Bitcoin. Oh my goodness. It's wild. That little amount of cash flow to buy Bitcoin in 5, 10, 20 years will literally pay for the entire properties themselves. I mean, it's so mind blowing to me, and just almost no one's figured it out.
Yeah, that's actually a good point there, Brandon, because I think that a lot of Bitcoiners, once they get to a certain point of understanding and time in Bitcoin, they just kind of write real estate off as, a waste of time. Mm-hmm. But I do think that there's something there. If you have like a decent amount of Bitcoin right now, especially I see over the next decade, houses really coming down, especially in Bitcoin terms, but even in dollar terms. As more and more people kind of figure out that there's a better store of value, I think that these STRC purchases will look like a joke compared to when real estate flows into Bitcoin. But that's a great point, because it's nice to have some in the cyber economy, but you also want to be investing also in the physical world. And I do think that there's an opportunity for Bitcoiners, whether it's like single house units or multi or whatever it is. I do think at some point Bitcoiners are going to go back a little bit to real estate and use the proceeds of that to buy more Bitcoin and actually leverage against real estate, Bitcoin, kind of create this portfolio that is almost untouchable at that point. Because as much as where we are today, I think it's important that people are almost all in on Bitcoin and cash, as Rajat likes to say. But at some point you want to start diversifying. We're not always going to be in the accumulate as much sats as you can phase. I think that Bitcoiners are going to start investing in other things here.
Yeah.
Sorry, there's some deer outside.
Yeah.
Distracted me a little bit. See it?
I love it. You got your bow? Let's go.
Oh, yeah, I see it moving.
Get that thing.
There was a lynx out there yesterday. First time I've seen one.
Whoa. Wow. Cool. Okay, well, that's next level. We should have streamed yesterday. Jeez.
I know.
Yeah, I mean, honestly, Jor, this is what's fascinating to me. I remember like a year, I don't know when it was now. It was probably like 9 months ago. And when last time I interviewed Dr. Jeff Ross, and I asked him, I was like, when do you see, because I was saying, I will know we're in hyper-Bitcoinization or some form of hyper-Bitcoinization when my residents or someone in the car wash, whatever asset you own, they're paying you in Bitcoin, right? Like that, when your tenant's like, hey, can I pay you in Bitcoin? Yeah. Or that's when, to me, it's like just my own opinion of like, when do we hit hyper-Bitcoinization? Because it's not some thing where it's like, hey, some guy on high came down and said, okay, it's Bitcoin's the account unit right. of account now across the world. It's just this thing that happens over time, right? So to me, I'm like, okay, that's when I know it's like nice to crawl out of my bunker, like I'm Punxsutawney Phil, like I'm gonna see my shadow as a gopher coming out, in February 2nd or whatever. So Groundhog's Day. And to me, it's like, okay, as a Bitcoiner, now I'll know it's safe. Because the thing I'll say, and the reason I got out of real estate largely, and again, we've talked about this, but it's city risk, it's state risk, it's province risk, it's country risk. It's that to me, where it's like, whoa, these cities are going bankrupt. I dealt with one of my properties where it was like, it was a hole in the ground, fix it all up, raise a bunch of money, fix it all up, refinance it, put tenants in there. And then I've got the city coming after me. I'm like, you realize this was a hole in the ground, right? It was condemned, but no, they're probably getting grants from the state or the federal government. They're getting paid off more, and they're pissed that I actually bought the property and fixed it up. So that to me was like, yeah, no, I'm not doing this anymore. Like, you guys, there's so many problems in the fiat world. And so I asked Dr. Jeff, where I'm going with all this, right, is like, when would you feel like it's safe to venture back into the normal world, the legacy assets? And he was like, yeah, probably 15 years, 20 years. Like, cause then at that point, the S curve is done, the power laws, like all those things have played out 20 years from now. And he's like, okay, now it doesn't make sense to like, oh, I'm investing in Bitcoin as an asset, as an investment. It's just money. And now I have to use that money to go buy other investments to now make a return that might outdo the 15% a year that Bitcoin's climbing each year, or 10% or whatever, 12% type of thing.
Go ahead.
I was going to say, I might be too bullish on Bitcoin when I say this, but I don't know if people are going to go back to investing in real estate, because housing is just, you can build more houses. There's infinity houses that you can build. So it doesn't make sense that the price of housing is going up.
I think it really depends though, Rajat, on like where, You know what I mean? Like, I agree with you. I would never invest in like a city again. I don't think that cities they're trending upwards, but like lakeside property, oceanfront property, like you can't make more of those properties. You can build as high as you want to in the city and put people in there, but there's still scarce land and like desirable land that I think you'd have probably better tenants, less maintenance on, that you could even, include just as your overall portfolio. I'm not 100% convinced on that either, Rajab, but I think it's kind of worth at least discussing.
If that's the case, though, then that makes real estate investing in general really risky. If those are the only kinds of property, like very desirable, scarce land and properties are the only thing that is a good investment in real estate, then that makes everything else incredibly risky comparatively. And I think real estate basically only works as an investment because of leverage. And even now, like that Grant Cardone guy, he's using the leverage of a real estate investment to go and purchase more Bitcoin over time, instead of raising the capital to buy Bitcoin, because you can raise more capital to buy properties and then buy Bitcoin over time. Like that's why he's doing that, in my opinion.
And having debt is risky. Like you do have to be smart. This is where like Dave Ramsey, again, Rajat, we go back to like, Dave Ramsey is wrong in the sense of like you're saving in the wrong money. So you're like, save. Well, you can't save an infinite piece of paper. That makes no sense. But at the same time, like he's right in the sense of you need experience, you need, skills in order to understand debt and how it works and manage these things properly. And that's why it's not for the average person. And so to your point, Forrest, like this is one of those things where it is tough. And I think the next epoch will be huge, because I think it was Jory, you were saying like there's going to be people like there was a small amount of people in the first 5-6 years of Bitcoin that, they were cypherpunks. Some of them lost their coins. Like it's just all over the place, right? They kind of checked out some of them are selling, like it's a different cohort. But the next 10 years, that 2016, 2017 to like 2027, this people, where there's like a big enough cadre of people, those people are going to be wealthy enough in the next epoch or two where, it's like, yeah, are you going to be really wealthy? Probably. Yeah, you will. But in saying that, there's going to be a lot of people that still need to do X, Y, and Z, put food on the table. They're going to want to build businesses, be back in Bitcoin, get into politics. So then to me, the next 10 years is massive, because the 10-year cohort from 2016 to 2026 or 17 to 2027 is going to be a level of people 10 years from now that have a lot of wealth, a lot of power, but they're not quite out of the system, if that makes sense. And they're going to want to pour back into that system, buying these legacy assets, buying sports teams, buying real estate, buying, businesses, and that, and politics. So yeah, it's going to be interesting.
I think they're going to do that more for fun.
That's what I was going to say.
Maybe,
too.
yeah.
Like they're going to do it out of passion. Like, how you guys know how Peter McCormack is doing. Or is it Peter McCormack?
Yep.
Like he's just buying random businesses for fun. Like he just likes doing it. He enjoys it.
It's for fun, and he also wants to like improve where he's living physically.
Right. I think that's the investment. Right. And then in that case, I guess you're not even looking at it from a profit motive perspective, right? You're looking at it from, how do I improve this place so that my kids can live here?
Exactly.
It's more, it gets past money. I think that's what Bitcoin does, though. It gives you that ability to get past the financial and into more of the spiritual, emotional, just doing things because you feel like it's right, rather than doing it because you need to make a profit.
And those are all valuable things, right? Like we kind of think of investing as being all money centric, but there's other valuable things besides money. And that's kind of what we're talking about here too. Like all real estate will be valuable to some degree, but does it make sense looking at it in a money mind frame of investing? Maybe not. It might make sense in some other way. Like owning a home is not just about, and owning a home is not just about like living somewhere. It's about, okay, now I have the freedom to put a hole in the wall when I hang a painting, and I don't have to ask the landlord. It's a freedom thing as well to some degree, and that's a valuable aspect, and why people might even pay a premium to owning a home compared to renting. So it helps you revalue things when the denominator isn't broken, and we're not all forced to just frantically try to invest and save for the money reasons alone.
Yeah, I think the biggest thing will be people won't buy more houses than they need.
Yeah.
They'll buy what they need and they'll be good.
Wouldn't that be nice?
Yeah. Amazing.
And it's just utility value. And you guys, I mean, I've seen so many of your guys' videos over the years, talking about this very thing, right? Bitcoin demonetizes these assets. So to your point, Forrest and Jor as well, right? Like you have a utility value, or like you look at gold and silver. Gold and silver goes up. We're going to have it be money. Like, come on, like, what are we doing? It goes up, and now your standard of living goes down because now the cost and everything that silver is in or gold's in now went up. Or even worse, it's not made anymore because now no one can afford it. And now your standard of living really goes down because no one even makes it anymore. Those things, the computers or whatever it is, because the things got too expensive. So that to me is the really big thing. And things go down to the utility value because Bitcoin sucks that monetary premium from all the assets.